So, how do people improve their credit score without getting into more debt?
Cool. I think there's a lot of really bad rumors and myths that go around how to improve your credit score. And I think one I hear going around all the time is like, oh, you should just make sure you keep a balance on your card. Horrible idea. That does not help you whatsoever. Really, the two biggest things you can do, it's make your payments on time
Hmm.
and keep your balance low. You try to keep it under 30% of the actual overall limit you have on your card. But doing those two things, that makes up about 65% of your overall credit score. So for most people, if you
Facts. Not necessarily the ratio in terms of the 30%, keeping it below that, but you want to have some sort of balance that rolls over to the following month, preferably low, that's super manageable, nominal, in fact, in terms of actual payments and your ability to make the payment for the following month. The reason being is um, payments are calculated. So if you drop it all the way to zero and you essentially just don't have a following payment for the next month that's scheduled via outstanding balance. So the below 30% is what we refer to as the utilization, and it's not on one card. So utilization is an aggregate or a total of your line of credit debt. So line of credit could be credit cards. It's a big factor in terms of consumer, but also personal lines of credit. Um, where it's not a credit card, it could be through a credit union, a bank, or whatever lending institution that gave you that line of credit. Line of credit is just short term, your ability to reuse those funds after you've made payments towards it again. Whereas a loan, you are just set on your principal interest and it gives you a certain term by which you agree to pay it amortized in those schedule of payments. Either it's typically every month, but whatever your arrangement is, after that set agreement or payment period, it's done. So in this case, and with often most cases of credit cards, it's a line of credit. But anyway, let's continue here.
doing those two items, you can have a great credit score, or you can improve what might be a bad credit score right now.
How about paying off?
It'll influence a good majority of your credit score, but it's not all dependent on your credit card balance. So, but they'll probably talk about more, or they'll probably get into it a little bit more here. But I want to make sure that, we understand it's not just credit cards that makes a totality. Well, he said it earlier, it's about 65% of your credit score. It depends. If you have, if you're a brand new person getting into credit or starting your credit journey and all you can open or apply or get approved for is a credit card, well, yes, that's 100% of your credit. However, as you mature, get older, maybe apply for a car note or get a mortgage, those type of, even just the application in and of itself will reflect on your credit. Now, if you get approved, that will be the debt or obligation that you owe that will reflect on your credit score. But so far, I like what he's saying.
Your credit card, because I feel like that's a rumor I hear all the time. Like, if you pay it off, that's bad, even though it feels like it should be good.
Oh no, it is a great thing because something called credit utilization, which is basically a fancy way of saying
Told you.
the percent of your overall credit limit that you're using. As long as you keep that under 30%, you're great, but keeping it at zero, even better, because now you're not paying any interest, which you should not be paying interest on your credit card. Be like you and pay your card off.
Yes. If I were to tattoo something on myself, it would be, if you're going to put on your credit card, pay it off so you don't pay interest, because then you're not paying more. And then you get air.
Now, sometimes this is easier said than done because life, right? You have every intention to pay off your card, bills, whatever, each month. That is the ultimate goal, right? And what if you lose your job? What if some unforeseen thing happens financially or otherwise health that will hinder you from prioritizing, okay, do I want to make this credit card payment, or do I have something more urgent that is going to need the funds that I have allocated for, this month on credit cards to be used here? But the majority of the time, you should have or have planned to make that payment. It's not, and I get this sometimes, or I remember getting this sometimes when I was working in the bank, in the retail side. Well, it's just money, right? It's just free money that I get. I'm like, no, credit card is a debt, and it has to be paid. So don't think it's free money. Credit cards, your limit, your availability, it's not free money. You're borrowing that money to make an immediate purchase at that time. And based on your terms and agreement, typically within 30 days or the end of the month, whatever it is, you have to pay that back, right? If you can't pay that back, they will allot a minimum payment based on interest, based on the outstanding balance, that is outlined on the terms and conditions and agreements. Honestly, I didn't read it when I initially got into my credit journey, but now I read it. It is not exciting. It is a little dull, but it is an agreement that you are going into with that lender or bank if you choose to get a credit card with them. So you should probably know what you're getting into. Even if you don't understand all the words, all the terms, all the legalities, at least you read it, you can at least have an idea of what you're getting into.
Line points.
Exactly. It's a
I'm
win-win.
not the expert here, but I am so adamant about how to use a credit card. I don't know. You tell me.
I've traveled so much for free just off of airline points.
Period. I'm not paying for flights. I'm not doing it.
I have points on one of my credit card. Actually, my credit card. I don't have multiple credit cards. I have one credit card. And whether it's for food, whether it's for gas, whatever purchase I make on it, there is a tier system of points that I get, which I like because I use it and I get rewarded those points for using it. Whereas if I use my debit card, if I use cash, it's just pretty much there's no additional incentive for me to pay with that method. Whereas with a credit card, okay, I'm incentivized because I'm using this types of rewards cards or whatever promo that they have going on. Because if I rack up so many purchases, it will equal so many points. It's a little bit of gamifying, but you have to be really disciplined in making sure that you pay off or at least pay a good chunk or majority of your balance, your outstanding balance, either at the end of the month or whenever your payment date is. Because the last thing you want is to keep putting it off, putting it off, putting it off. Because what will happen is that debt, that balance, that outstanding balance will just slowly creep up and start creating a mountain out of a molehill. So I like this video. Shout out to Million Stories Media. Nice job.